Hi everyone, welcome to the second episode of Who's That Girl, the Prosperity Channel. As you know, I'm starting this channel to kind of share my personal view about investments, how to survive and thrive in this complex world. And who would have known so many things have happened since the release of my first video. Initially, I thought I was just gonna start the second episode going like, inflation, and then everybody goes, but clearly that's not the case. There's a lot of turbulence going on in the world that we live in today, right now with conflicts with Ukraine and Russia. Yeah, so what does this all mean? It means that inflation, the turbulence around the world, and other factors are bigger powers than we can control. That means our standard typical, if you were like me previously, which is you work hard for the money and that's it, that equation is simply not going to cut it. We would have to do something that should diversify what we are currently what we're doing existingly to hedge all the uncertainty that's to come. That said, in today's episode, we're going to be covering two things. One is how do you determine what's a good investment? Number two, because I'm a crypto bull myself, I'm going to be explaining the top line pillars that are within the ecosystem of cryptocurrencies in terms of investments, in hopes for you to understand a lot better what the hell people are talking about. So let's dive right in. And here we are. Before we dive into what makes a good investment, we first need to answer the quick question of why is it not enough that I work hard for the money, end of story, and then happily ever after? Well, the biggest offender of this equation is inflation, everyone's favorite topic. Historically, the inflation numbers on an annual level is around 1 to 2%, sometimes 3 to 4, but mostly 1 to 2%, and that is what Asian people would call cooking frog with warm water. You know, like the frog doesn't know it's dying situation. But now, in the most recent months, I'm sure many of you have felt the pain when paying your grocery bills and other bills recently, that what Fed is calling this 7% transitory inflation is actually more than that. To give you an example, my favorite bread from the Japanese supermarket went from $6.99, which is already expensive, to $7.99 and some places $9.99. So I stopped eating bread. Not to derail. And to understand where inflation comes from, if you watch my last episode about currencies and exchanges and things like that, because America is printing a lot of money and obviously there's factors about our currency and our ability to do business with other countries, obviously, imports, exports, things like that. But then you've also heard the headlines about worker shortage, supply chain issues, and what this all means is that companies are asked to pay more for workers to fill the labor shortage gap, and then they pass on that incremental cost to their consumers. Then the consumer pays for that incremental cost, and then the vicious cycle continues, right? So this part is kind of very scary because we don't know when it ends, and then why we need to diversify, because our work hard for the money strategy doesn't include this kind of increases. None of our paychecks are going up at 15% annually, so that we can hedge against all these uncertainties that's sort of, coming upon us. What makes a good investment? I believe that everyone's faith, like if you talk about like Asian fortune telling, I guess, or like fortune telling in general, people talk about how like most people will at least have one opportunity to like make it big. Some people are lucky, they have multiple opportunities. But if you have a big opportunity to make it big, what would it be? What would you do? And can you ride the wave, right? That said, what makes a good investment? Jumping back into the previous conversation about inflation, if transitory inflation is at 7%, but we all know it's like 15 to 20%, any investment that's giving us more than that, or right around 20% hypothetically, let's put that as a number, essentially we are preserving value for the money that we earned. Most banks for savings account now, you can't, even a high yield savings account, they're not even giving you 1%, right? Essentially, that means that if we're leaving cash in the bank, we're actually not preserving money, we're actually losing value. But that's not to say to throw all your cash away, right? We still need to be very strategic on how we diversify, where we put the money. I'm not a investment expert in the stock market arena, because I feel like every time I try to go in, I always lose money. But there's bonds, real estate, conservative, risky assets, things like that. Depending on what interest you have, any investment that gives you probably 20%, I would say is a safe bet, right? But you also have to evaluate how much effort you put in. Like, the amount of effort and money you put in worth it for the return that you're getting. For me, I'm kind of a lazy person, but I am fascinated about the crypto world, because I think that is where the future of internet is going to be. It has a deflationary characteristic that is going to help improve our financial system for the future. And that's why in today's episode, I'm gonna walk you through the different pillars and the types of cryptocurrencies that you see in headlines and what do they all mean.
So the moment everyone's been waiting for, which is what is everyone talking about in terms of all the different terminologies that's in the news. So today I'm going to give you a quick high-level overview of what people are talking about, help you better understand the headlines and the risk that are involved within each pillars, and then hopefully you get as excited as me about cryptocurrencies. What is blockchain and cryptocurrencies? Blockchain is essentially the technology behind Web 3.0 that provides secure transactions. So previously in my last video, we talked about how Web 2.0, we're at the mercy of these companies to do their due diligence to protect our identity, right? There's the whole thing about identity theft and hacks and things like that in the world that we live in today. Think about like Google's, Facebook's of the world, that they are called the centralized, because we actually transact with these companies by giving them our credit card number, but we are at their mercy to make sure that they protect our info from being hacked. But blockchain is essentially the idea that there's different methodologies that allows these blocks to randomly use different ways, to use different methodologies to help us securely approve transactions between peer to peer. So entity A and entity B wants to do a transaction of any kind. It would allow blockchain to randomize the approval process of this particular transaction and say, let's go. And then behind the blockchain technology, there's also two concepts that are currently sort of being developed. And without getting into a snooze fest of what it is, there's two different types. One is proof of work, which is mining, and this is what Bitcoin is. Essentially, there's like the FUD. FUD is also stand for fear, uncertainty, and doubt in the crypto space, and you'll hear that a lot. Essentially, like, oh, it takes up so much energy, like it's not efficient. Well, we're still in very early phases of all of these developments, so it'll only get better with time, and it is already getting better, because you've heard Elon Musk saying we're going to take Bitcoin out of our avail for transaction because it's energy efficiency. Yes, that is currently being worked on, part of the migration and the transformation of the world that we're going in today, and it's extremely necessary, right? And then we have the proof of stake is essentially another methodology that leverage the blockchain to validate various, well, we won't go into details about it, but various ways to randomize a transaction for the hackers to not able to hack any transactions or create false alarm within the ecosystem. So this is why I previously mentioned that for Web 2.0, to transform into 3.0, it is completely necessary, and it's already in progress. If we understand the ecosystem and try to invest in the right way, we could make a lot of gains, because volatility could become an opportunity in this case. The second part is crypto. Cryptocurrencies essentially is digital money. What started off as my previous episode about just trying to be super cheap and buy my expensive bag at a very low fee and low transaction cost turned into this aha moment for me thinking about digital money and digital cryptocurrencies. What this really means is that the idea of it, the globalized currency that doesn't fluctuate as much. And right now it is very volatile. So that's not a true statement. But once it becomes very mature, it would become a currency that does not fluctuate and preserve the value of money. And a great example of this currently, right now, we're seeing conflict between Russia and Ukraine. Horrible scenario to make this sort of a reality is that because of sanctions around these conflict areas, import exports are being at halt. The currency for Ukraine and Russia are becoming hyperinflationary. Their money basically is instantly worth nothing. And what people are trying to do is to try to preserve the value of their existing currency so it's not prone to hyperinflation. And so this is the reason why it got me super bullish to have a real life use cases of a cryptocurrency in the world where people are not pegged to a centralized bank. If you saw my story the other day about how Ukraine central bank already started to limit how much people can withdraw on a daily basis, that is also a factor that goes into this, is that if people need to escape for their own safety, they should have the ability to hedge against what's coming to them and have the access to the money that they need to keep themselves safe. There's more to that, obviously. So definitely we need regulation on this, but this is why cryptocurrency or globalized currency is, it's something I see that has a huge need in the future. Then we have the 4 pillars of what are the different topics of things that people are talking about in the other headlines. So essentially, when you see any crypto headlines out in the market these days, it is most likely fall into one of these 4 pillars: the financial ecosystem, the NFTs, the metaverse gaming, and or meme coins. There's different characteristics under these 4 pillars. And one of the first ones that I mentioned previously about a deflationary, the part that I'm most excited about is the financial system. So this is kind of interesting because the deflationary aspect about this is that crypto is going to enable decentralized way of peer-to-peer transaction. And what that does is it takes out the middleman. It takes out the middleman and actually allows for less transaction fees. And what this also does, and then I put it in quotation, the dream is to be completely decentralized. However, there is decentralized or half centralized because from a technology standpoint, it's easier to validate that way, but not to go into crazy whatever, but that's the concept. The smart contracts are usually also built into this ecosystem, which allows lending, borrowing, and interest within this ecosystem. So this is why there's a love-hate narrative in the media, whether they're villainizing cryptocurrencies, whatnot. The love-hate for banks and big financial systems is that they know that blockchain cryptocurrency is going to make their life more efficient and it's the future. However, they're not quite sure how they're going to adopt to it because there's no regulation. So the volatility here is that because everybody, all the technology companies are jumping out of the gate, creating their ecosystem and proving their concepts work, we potentially may see some kind of a ebbs and flow volatility. I would call it evolution within this ecosystem, because think of like internet in 2000 when we all thought that Yahoo was the best search engine. Then here comes Google. If you look at the year 2000, which companies are the best internet companies, and then you look at the new dominant internet companies today in 2022, they are completely different types of internet companies, right? So I foresee that this areas of volatility is the same thing. In that comparison, that there might be an evolution of certain technology being highly adopted and then certain technology being decelerated. So the volatility is that there is going to be a transformation within this ecosystem, but I do think that by understanding this pillar of cryptocurrencies, you probably have the best gain. when it comes to investments. But I'll go more into that in future episodes for sure. Now, everyone's favorite topic, the NFT, the non-fungible token. Non-fungible token. I always call it non-fuckable token. Anyway, it's non-fungible token. And what does it do? At a very high level, it's basically a unique certificate of transaction or ownership. So contrary to what other people's understanding of NFTs are, which is not just art, NFT actually goes beyond the art sector. So what it does is it creates the contract to validate various things. It could be art, it could be collectibles like, basketball cards or Mickey Mouse, like digital trophies or whatever it is. It could be music, it could be real estate, or like real life real estate sort of onboarded into the ecosystem, or even any transaction of crypto tokens that you're buying in real time. That unique authenticator tells you that this person owns this property is an NFT. So anything could be an NFT that is unique, that could not be duplicated. It's non-fungible, not fungible. Anyway, that thing. And that's the NFTs. Now, we'll probably create another episode that talks only about NFTs and what I think about it from an investment perspective. Then we have the meta gaming world, which is not exclusive to Facebook, obviously, ecosystem. And I will create a future episode. The next episode is going to actually talk about centralized versus decentralized, as well as open versus closed. And this will kind of relate to that topic in itself. The metaverse gaming ecosystem is, I'm clearly not a gamer, but this is how far I understand it. So we're just going to fall into the buckets, okay? The games creating these ecosystems that allow people to play to earn. Whole ecosystem that's created inside digital gaming world. And these people, if you think about collecting rare Pokemons of sorts, or have things that they want to showcase, right? So for example, they can exchange NFTs or showcase their NFTs, or they can trade tokens or like rare gems that they have, or they can host concerts. They can do a lot of things within these virtual reality world. Whether all of us are actually going to live in that world, that is to be debated. However, that's what's happening in the metaverse gaming world. Whether or not, if you believe in this ecosystem, when it comes to investments, is how big do you think this ecosystem will be? Like, do you believe that Facebook is placing bet that all of us are going to be in the metaverse? No, like maybe I'll go into the metaverse once in a blue moon, but like not all the time. I have enough problem in the real life already. Like, why am I trying to create a digital self to create more problem for myself? Like, I don't know. That's my personal opinion. And then lastly, in terms of in-game real estate, we're seeing Nike's, Adidas of the world trying to buy in-game real estate to have their sort of digital presence, showcasing different upcoming sneakers that may not have released, but then having people see whether or not there's group interest before production even starts. Like, so those are the kind of different concept reasons why people get into this space. But when it comes to investment, it really depends on how big we think this sector will be. Or is it a bubble? Nobody knows. So that's something to be debated on. Meme coins. The meme coins is what really gets the headlines for people to be like, oh my God, crypto, la, la, la. And then everyone's attention is spam going like, oh, look at how risky cryptos are. But then, or maybe some people turn into a millionaire, caught the attention of a reporter. So if you look one layer down to these meme coins, examples of them are like the Doge and Sheep. And by the way, anyone can create these tokens, right? But if you look one layer down, very different from the financial tokens, they're completely different. Some of them, the financial tokens, in my opinion, has actual function and real life use cases. But then you got the meme coins where it doesn't really have functionality other than just being popular. And so that, like in the past couple of months, a more well-known rug pull, basically scam within the crypto space, was the Squid Game rug pull, where this guy created, I guess, like a fake token, and then because Squid Game was such a popular show, a lot of people thought it was an actual token, but it was funny because it was like a bait and switch where you put your money in there, but you can't cash out. So the token went parabolic very quickly. And then the person just took all the money out. That's the part about meme coins that really drives that is super risky, and hence the crazy volatility, right? The crazy volatility really comes from these tokens when they pump. First of all, you don't know which ones are going to pump, and there are thousands and hundreds of them. Anybody can create one, and the magical meme ones like the Sheeb and Doge could go parabolic and make millionaires in thin air. If you then look another layer down, only very few people with very deep pockets owns these tokens. So that also means that depending on which price you buy in at, the large shareholder of these meme coins could decide that they want to cash out at any given point. Then all of a sudden, everyone who still hold on to the token and hoping it will just go to, like 1 million, they're all going to be left behind. And this kind of sound like a rug pull. When a meme coin already pumped to parabolic, there's a chance that it go pump and then pump again. But most likely when they pump parabolic, some people already cashed out, and it's very hard for it to go like all the way through because it doesn't have real functionality in it. So as you can see, all of these 4 pillars is what most of the headlines are talking about, but the volatility and the risk comes in different ways and different reasoning.
So I hope you find this super fascinating like me. I know that I'm just sharing what I know about these different topics and hope to get you excited about it. Obviously, there's tons of YouTubers talking about more nerdy things than me in terms of, the protocols and just a lot of more techy stuffs, but I'm kind of directing you in terms of what I know, the risk level, pockets of opportunity for you to sort of explore. But obviously learn from other YouTubers and create your own conclusion after watching some of their videos. The thing that they say about investment is don't trust anyone, including me. But the idea of it is to learn from other people and to dabble into this world with caution. Also is that if you don't understand an investment that you're making, that's called gambling. But if you do know where the risks are, that means that it's potentially an investment. So that said, I know some of you might be wondering how to get started, and I am sharing my personal, it's not sponsored, obviously, nobody's sponsoring a channel with 15 subscribers, okay? But it's my personal Coinbase link down below if you want to check it out. It takes a little time to set up, but it's accepted in most countries, and it's also publicly traded. So there is a slightly less risk of a rug pull situation because it's a known exchange. In my upcoming episodes, I will be sharing with you my investment strategy, how to get into it, how to look at certain aspects of things. So if you want to be prepared, get ready, check out the link below. But if not, you can certainly sign on to other crypto exchanges that are legit, and also, follow along the journey of my crypto investment along the way as well. And until our next episode, I will see you soon.